From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Friday, October 2nd. It is a down day for the Dow, the S&P, and NASDAQ. Stocks are slumping in a volatile session as investors weigh the implications of President Trump's positive test for the coronavirus, along with renewed efforts to forge agreement on fiscal stimulus. The NASDAQ 100 index leading losses with declines for tech companies, including Apple, Microsoft, and Amazon. Apple shares down 2.6%. Amazon also down 2.6%, while Microsoft down now by 2.2%. Mega cap shares also dragging down the S&P 500 index. The S&P down 17, a drop of 0.5%. The Dow is now lower by 11 points, down less than 0.1%. Nasdaq is down 200, a drop there of just about 1.8%. 10-year yield 0.69%. Gold is down 0.1%, 19.03 the ounce. And West Texas Intermediate crude down 4.6%, 36.95 for a barrel of West Texas Intermediate crude. A disappointing jobs report that showed less hiring than analysts had estimated underscored the urgency to push through an aid measure. What's ahead for the October jobs reading? That question this morning for Laura Rame, who is chief U.S. economist at FS Investments and was interviewed on Bloomberg Television.
I think for October, we may continue to see the unemployment rate come down a little bit. Remember that we're also seeing now, I think in September, another interesting feature was people dropping out of the labor market. I wonder how much of that is related to kids still being at home and parents unable to rejoin the workforce.
Airbnb plans to make its IPO filing public in November and raise about $3 billion in a December offering, this according to Reuters, citing sources. Airline shares, they're moving higher after House Speaker Nancy Pelosi said relief for the industry is advancing in Congress. Among some of the airline names, UAL up 1.6%, American Airlines up 1.8%, Delta up 1.6%, Southwest rounding out the big four up by 1.8%. Recapping equities lower, S&P now down 22. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, time to do a little bit of Business Week economics. Jason Kelly alongside Alex Steele here with you on a Friday afternoon. And on this Jobs Day, delighted to have with us Richard Trumka, president of the AFL-CIO. He joins us from Maryland. Richard, a perfect day to talk to you. We saw the numbers this morning amid some other headlines, to say the least. But when you look at the employment picture on behalf of your members and through the prism of labor, what do you see?
Well, you see that the recovery is starting to run out of steam. Most states provide 6 months of regular unemployment benefits, and the recession has lasted longer than 6 months already. And so many of them are starting to exhaust their regular state benefits. In addition to that, the Republicans in the Senate allowed the across-the-board $600 increase in weekly benefits to expire. Last week was the 9th week of unemployment in the pandemic that recipients did not get the $600. And so you're seeing job creation go down each month. In June, we had 4.8 months. 4.8 million when everything was in effect. In July, you had 1.8, August 1.4. Now we had 661,000. We're still 12 million jobs below where we would have been prior to the recession. And you have 12 million people right now without health care. All of that's dragging down the ability of people to buy and consume and create demand and create jobs.
I'm really curious as to how you see the job landscape evolving. There's a real debate that's sort of coming up in terms of when and will workers regain power after COVID. There's one that says, yes, we're going to see higher minimum wages. If Biden gets the White House, that's going to be a big push also. The other is that as long as you have big tech being big tech, it's not going to allow for workers to really gain rights and mobilize in the right way. What do you think about that? Because that's going to have a dramatic effect as to how we come out of this.
Look, let's start off with a little more basic of that, and I'll broaden out your question. Workers right now believe that neither the political system or the economic system is working for them because of the growing inequality in this country. And when workers talk about inequality, there's three inequalities that we're talking about. Inequality of wages and wealth, inequality of opportunity, and inequality of power. Until you fix the inequality of power between corporations and workers, you're never going to see wages increase. And without them, you're never going to see an economy that really grows, because our economy is 72% driven by consumer spending. That growing inequality actually threatens the system that we have right now. So what we're looking for is to change the laws that were written in 1948 and are totally antiquated and unacceptable and unusable today to new laws. President or Vice President Biden, when elected, will do that. It will give workers more power. They'll be able to negotiate better wages. With those wages, they will spend and create demand and create jobs.
And so in this next 30 days before this election, Richard, what do you need to hear? What are you expecting to hear from former Vice President Biden about his plans? What do you still need to hear?
Well, you know, look, he's talked to us. He was with us on Labor Day, and he talked to us about things. Here's what I know about Joe. I've known him for 40 years, literally, personally known him for 40 years. And he's always been a blue-collar guy. He understands that a job's more than a paycheck. That a job really is about dignity and respect and security. And he really does want to bring more jobs to us. And he has several plans to do that. We want to continue hearing him talk about kitchen table economics, those things that affects workers at the kitchen table every night as they discuss their day and discuss their future. He's done that so far. We saw a debate the other night, and I was truly saddened. I mean, the debate itself was saddening and embarrassing because of the president, but the president didn't say a single thing about what he was going to do. He only told us about things that were bad about somebody else, or even that wasn't true, but that's what he talked about. I think workers want to hear what you're going to do to make it better for them. What are you going to do to fix the economy? How are you going to do it? And don't give us platitudes. We're smarter than that.
Right.
And do you feel that, so in the middle of the virus, it has also expanded inequality in terms of white employment recovering faster than African-American employment, for example, and Latinx employment. Who fixes that? How do we fix that? The Fed's opened up their employment mandate, but there's only so much like the Fed can do there.
Well, look, as I said, corporations are too strong and workers are too weak. They don't get enough share of what we produce. If you pass the PRO Act and you give every worker in the country the ability to negotiate with their employer, whether they have a union or not, they ought to be able to negotiate with their employer as a single body to get a fair wage, to get fair benefits. When they do that, you'll start to see inequality start to shrink. You can't fix inequality. You can't fix inequality of opportunity, which is racism as well, unless you fix inequality of power between workers and employers.
Richard, one last question for you.
And the PRO Act would do that, by the way.
Only about 30 seconds left here, but tell me, are your members getting what they need from management when it comes to the right protections as it relates to the virus?
Absolutely not. We still struggle with PPE on the front lines. We still have our members getting infected. OSHA is still non-existent. It's AWOL. It's not protecting workers. We're having to supply our members with PPE that they should be getting from their employer. It's a disgrace. We do not have a temporary pandemic standard right now. We've tried to get one, but this administration refuses to help us and refuses to pass one, and workers are getting sick and dying because of it.
All right. Well, sorry to end on that note, but we are going to have to end it there. Looking forward to catching up with you in the not-too-distant future. Richard Trumka, he is, of course, the president of the AFL-CIO, and we know that frontline workers have been so disproportionately exposed to this virus in many ways. So look forward to continuing the conversation down the line with Richard. You're listening to Bloomberg Business Week. Let's head down to Washington. Lots of world and national headlines to get to with Nancy Lyons. Hey, Nancy.
Hey, Jason. President Trump, who now has coronavirus, is drawing fire from his critics who want to know why he chose to attend a fundraiser at his New Jersey resort last night after learning he had been exposed to the virus when an aide, Hope Hicks, had tested positive. White House Press Secretary Kayleigh McEnany defends the president's decision.
It was deemed safe for the president to go. He socially distanced. It was an outdoor event, and it was deemed safe by White House operations.
The president is said to be experiencing mild symptoms of coronavirus, and while he recovers, all campaign events have been postponed or are going virtual. With President Trump becoming the latest high-profile COVID-19 patient, Health Secretary Alex Azar has been defending the administration's pandemic policies to the House Coronavirus Subcommittee. Bloomberg's Irv Chapman reports.
We wish the President and the First Lady and every American fighting COVID-19 a swift and complete recovery.
Secretary Azar said the United States has done better than European countries.
If we hadn't taken some of the aggressive early steps that we took, we could have lost 2 million Americans. But our actions have made a difference. It is our mission to make advances that help save some of those lives.
Azar blamed recent surges of the coronavirus on Americans who crowd into bars, clubs, and family reunions without face masks. In Washington, Irv Chapman, Bloomberg Radio.
House Speaker Nancy Pelosi says negotiations on a new stimulus with the White House will press ahead, and President Trump's COVID-19 diagnosis might actually change the tenor of the talks by emphasizing the seriousness of the pandemic. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Hey, Nance, thanks so much. We really appreciate it. Jason Kelly and Alex Steele here with you on a Friday afternoon. And I tell you, this is one of these stories, Alex, I think both you and I would agree that had this happened on a day that wasn't today, we'd be talking about Airbnb a lot. But let's take a minute and talk about it. As you said when we read the headline, not a shocker. We've expected that Airbnb might still go public this year. I will say it's interesting that their business seems to have rebounded maybe faster than some might have expected given, global pandemic.
Yeah, and this is according to a Reuters report that they're going to file in November to raise about $3 billion in a December offering. It is a curious time to do that when you're sort of dealing with a market that's managing their books at the end of the year. But to your point, we may not be seeing people go to the Bahamas, but they will take a camper and they will go somewhere else in the U.S. where they can drive to and not take a plane.
Yeah.
So that could also have been part of the story, which I think is kind of interesting. But if they're going in December, they must see some kind of good recovery in next year, right?
Yes. I think that must be what it is. They must be sort of looking out and anticipating. You're right. It's sort of a long-term play. I mean, this is arguably one of the best-known unicorns that is still private and, following in the footsteps of the Ubers and whatnots of the world, this kind of sharing economy. I mean, Airbnb has grown pretty fast and was really thriving pre-pandemic, and as we've been discussing, sort of had a different kind of growth as people thought about, well, maybe I'm going to rent a house for a couple months and get away from the city or something.
But I'm actually really interested in to see how taxes change in big cities as they're bleeding money for people leaving. There's a resurgence again of the pied-à-terre tax in New York City, which would just hammer the real estate market. And I wonder what that would do to an Airbnb in a place like this, for example.
Really interesting point. Yeah, so lots more to come on the Airbnb IPO. Reuters reporting a December filing. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower on Trump virus volatility. It's a down Friday, on track for an up week. Let us get the latest now as we head right over the first word breaking news desk for today's afternoon call. There he is, Bill Maloney.
And good afternoon, Charlie. That's right. It's all about Trump testing positive today, as well as stimulus talks. Dow's currently down 44 points. We're down 433 on the open. S&P's dropped 21. NASDAQ is lower by 217 points. The U.S. 10-year yield at 0.69%. Gold trading lower by 3. Transports gained 91 points. And among the main 11 S&P sectors, leaders to the upside were utilities, real estate, and materials. Tech, telecom, and consumer discretionary led to the downside. Leaders to the upside in the Dow, Dow Inc., Caterpillar, and Honeywell, while Amgen and Apple were under pressure. And in deal news, Duke rejected a NextEra bid, left the door open for further talks. And Dow Jones reported that CC Capital and Motive Partners to buy Wilshire Associates. In other news, Airbnb plans to go public in December, raise about $3 billion. And wrapping things up, Deere traded to an all-time high. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, I said it earlier about Peter Coy and Joel Weber being like, hey, I want to know what Coy has to say about the economics of this. There was one person who I wanted to hear from when I saw these headlines this morning, Alex Steele, when it came to President Trump and that positive coronavirus test, and that is Josh Green, national correspondent for Bloomberg Business Week, author of Devil's Bargain, and our go-to guy when it comes to politics. He joins us on the phone from North Carolina. All right, Josh, your reaction when you saw these headlines breaking overnight and into the morning?
I actually got woken up by a phone call from CNN alerting me that Trump had tested positive. And because I'd written a big story about what happens if Trump tests positive back in May, that sort of unleashed the flood.
Yeah.
So, shock and surprise, although when you step back and think about it, it really shouldn't be that much of a shock, given the way that the White House generally has treated taking health precautions, including the president.
So you did write that article, which is, I had the exact same thought. I was like, I must talk to Josh Green today in some capacity. So how do we think about it? We don't want to speculate, but we do want to understand the procedure of how to keep the government running, et cetera.
Yeah, well, in talking to all the constitutional experts, I talked to former administration officials, Republican and Democratic, to see how previous White House administrations would have handled this. The one clear message that everyone sent is the most important thing is that the American public know and be confident that there is a commander-in-chief in charge. Now, if Trump is incapacitated because of the coronavirus, that isn't necessarily a reason for worry. Right now the White House is saying that his symptoms are mild, but there have been routine examples in the past where presidents have temporarily handed over power under the 25th Amendment to, for instance, undergo a medical procedure. George W. Bush did that twice for colonoscopies during his presidency. Ronald Reagan did it once during his presidency. So it's really not all that unusual. Where it becomes a little dicier is what would happen if Trump and Pence both tested positive for coronavirus and became sick to an extent that they couldn't carry out their duties. In that scenario, the Constitution has a clear chain of succession, but it next goes to Democratic House Speaker Nancy Pelosi. And all of the experts I spoke to said that is the point at which things get a little hairy, because the Constitution, while it does give a line of succession, doesn't define what actually constitutes a president's ability to do the job. And so if there is a dispute, if Trump and Pence were to become sick, and Pelosi were to say, well, you're incapacitated, I'm the president, and the White House were to say, no, they can still do the job, then you wind up in court, and that becomes a really scary scenario where you would have, presumably, a constitutional crisis, global markets falling, and all of this would wind up in court. I think, thankfully, that is still a long way off, but it does highlight one of the holes in the line of succession.
All right, so let's move to the current political reaction to this and the implications of this happening, Josh, with just over 30 days to go in this hotly contested, closely watched, most important in a generation, if you believe most people, presidential election. How does it change it?
Well, I literally just filed a column that should be going up any second now, and I will cannibalize my potential readership to share it with your listeners.
You mean you're going to preview it and tease it for them, right?
Okay, that's the term of art. Look, I mean, the short answer here is this is obviously not good news for President Trump and his reelection efforts. The election was already shaping up to be a referendum of his handling of coronavirus. The president, the White House, and the reelection campaign have all tried to move on and focus on other things like the growing economy. This guarantees that coronavirus will continue to be, the main story in the weeks leading up to the election. And what I did in my column was dive a little deeper into how particularly that could affect different voter groups. The one that I keyed in on that I think is going to be really critical was before the president's diagnosis, but certainly will be now that he's tested positive, is white non-college educated women, often referred to as waitress moms by pundits. They were a huge component of Trump's victory in 2016. He's been bleeding their support ever since. If you look at polls, they are particularly worried about coronavirus, unhappy with his treatment, and as a group, they are overrepresented in the upper Midwest swing states that are probably going to decide the election. Trump needed to win them back. I think that job is going to be even tougher now following his diagnosis.
Can you help me understand also what happens if, for some reason, Trump becomes incapacitated and can't then take the presidency if he wins? Like, what's the process if Trump's still on the ballot and Pence is still his VP for the election? Like, what happens? What does the RNC do? How does the Electoral College deal with that?
I mean, if Trump were to be reelected, Mike Pence will be his VP. If Trump is incapacitated, two things then happen. Number one, Trump could willingly, under the 25th Amendment, transfer power to his vice president temporarily. Or if he's not able to do that, if he's sedated or intubated or otherwise unable or unwilling to make that transfer, then then Pence in the cabinet can get together and decide to execute that transfer of power themselves. So that would be a scenario.
So if you're in the Biden camp right now, we've seen, Vice President Biden, he, tweeted, thoughts to the president and the first lady on behalf of him and former second lady Jill Biden, Dr. Jill Biden. So we've seen his sort of public reaction. We're also seeing him make a fairly rare road trip today to Michigan as planned after he did test negative, according to his camp. If you are the Biden campaign right now, what's the playbook?
Well, I think clearly you want to express sympathy, which Biden and his wife have done. At the same time, the Democrats I've spoke to today, say there's a bit of a debate. I mean, how out there do they want to be? Do they want to take down their ads, attacking Trump for his handling of COVID? Will that seem ungracious? Do they want to pull Biden off the road for a couple days? Or, do they want him to kind of go out there and continue as usual, showing that because he took the precaution and has avoided being infected, that, he should be out there making the case for his candidacy. And I think what we've seen just in the last couple hours is that Biden and Kamala Harris have every intention of going out and continuing to campaign.
I got to be honest with you, I don't usually watch vice presidential debates. Is this now must-see TV this week?
I think anything having to do with this campaign and the principles is pretty much must-see TV because you just never know what's going to happen. But I think certainly given Trump's diagnosis and the spotlight or the even more intense spotlight that is thrown on the race, I think everybody knows. I would predict that this will be the highest-rated vice presidential debate ever held, even eclipsing the Sarah Palin one a few years ago. I think a lot of people are going to have questions about how Mike Pence is going to answer for what's happened and try and reassure voters that despite COVID running rampant in the West Wing, that Trump is still able and capable to handle this crisis.
So, Josh, one of the things you have pointed out in your reporting around this election and the previous election, the one that the president won to become president, was that, this is a campaign where the real campaign manager and the real star of the show, by his own choice, is Donald J. Trump, President Trump. If he is sidelined, as he appears to be, even if he can still tweet and whatnot, who's his best surrogate in this vital stretch? Who does he turn to in order to continue to get his message out in these last 30 days?
It's a great question. I think the answer is that there really isn't one. I mean, Mike Pence has said that he will go out and continue to campaign, but of course Pence doesn't have anywhere near the star wattage and the drawing power that the president does. I think one of the downsides of building the kind of cult of personality that President Trump has as both candidate and president is that it's really tough to shove an understudy out there if you get ill. And so we've seen the Trump campaign is canceling all his events for the foreseeable future. He may do something electronically or on Twitter, but certainly this is going to be an impediment to his ability to get out there and try and narrow the gap with Joe Biden. And I don't see anybody besides Trump himself that can really be an effective messenger in that regard.
So does this increase or decrease the likelihood of a contested election?
It's really hard to say. I mean, making predictions about this are so difficult. But if you look at the hurdle that COVID and his handling of COVID was already posing to Trump's presidency, I mean, we see most polls showing Biden with a 6, 7, 8-point lead. Scenarios in which there's a dispute about the election almost invariably revolve around it being a close election. I don't imagine that Trump's diagnosis is going to make the election closer. I think if it has any effect at all, it will probably be to help Biden and would therefore lower those scenarios. But until we get reliable, high-quality public polling, which is probably going to take a few days, I don't think we can really say what the political effects of this are going to be one way or the other.
Josh, last question for you, and then we know you've got a million other things to do. What does this do potentially to the SCOTUS nomination? Anything?
Well, it's interesting. One of the Republican members of the Judiciary Committee, Senator Mike Lee of Utah, also announced he's tested positive for COVID now after visiting the White House. That could put a damper on things. Mitch McConnell and Republicans have been so determined to push through this nomination. It's hard for me to believe that they would be thwarted by COVID. Maybe this delays things by a couple of days. Congress is scrambling to put in place a COVID testing protocol, but I'd be very surprised if this wound up scotching the nomination.
Right. Josh Green, you're literally the best. Thank you so much. Bloomberg Business Week national correspondent, the guy you want to hear from on a day like this. So grateful to him for spending some time with us. Check out everything he's writing, and that includes apparently a column that just published. Check that out on the Bloomberg Terminal and at Bloomberg.com. Also the author, of course, of Devil's Bargain, the definitive book about the 2016 election. Coming up, we're going to hear a preview of Lisa Abramowitz's great special that is premiering tonight. But first, let's get a check on the markets with Charlie Pellet. Hey, Charlie.
Thank you very much, Jason Kelly. We've got 30 minutes to go ahead of the closing bell on this Friday. On track for an up week. Going to be a losing Friday for the Dow, the S&P, and NASDAQ. At least that's where we stand right now. Stocks are slumping in volatile trading as investors weigh the implications of President Trump's positive test for the coronavirus, along with renewed efforts to forge agreement on fiscal stimulus. S&P now lower by 19, down 0.6%. The Dow is down 34, a drop of 0.1%, and NASDAQ is down 210 points, a drop of 1.9%. The NASDAQ 100 index down now by 2.4%. Dow Transports, they're up by 0.9%. 10-year yield 0.69%. Gold is down 0.1%, 19.03 the ounce, and West Texas Intermediate crude down 4.4%, $37 even a barrel. The president's health very much on the minds of investors on this Friday. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he was interviewed this morning on Bloomberg Television.
If there's a good part of this story, it's that the U.S. medical community has learned a tremendous amount about how to take care of COVID-19 patients, both in mild as well as severe disease, over the course of the last 6 months. So hospitalization rates have been going down, death rates have been going down. Some of that is due to demographic shifts in infection, but a lot of it is due to doctors now knowing how to treat their patients and get better results from the more severe cases.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Ryanair Holdings is reported to be in talks to buy between 150 and 200 Boeing 737 MAX aircraft in a deal that would boost confidence in the grounded jet as it prepares for a return to service, this according to a report from the Irish Independent. Boeing shares trading lower now, little change, down by less than 0.1%. Airbnb plans to make its IPO filing public in November and raise about $3 billion in a December offering, this according to Reuters, citing people familiar with the situation. Recapping equities lower, S&P down 16, a drop of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Alex Steele. I'm still sort of like digesting everything that Josh Green was talking about in terms of like where we go from here and the political implications of that. I have a feeling we're all going to be talking about this all weekend and into next week as we get into the home stretch of this election. And it's a reminder, the news from the president and from the White House, that we are in the midst of a public health crisis, this coronavirus pandemic. We also know that it's an economic crisis felt by millions across the country. We were reminded of that with the jobs report earlier. But we also know the pain hasn't been distributed equally, and the youngest members of the workforce, they have borne the brunt of the economic fallout so far, and there could be permanent damage from there. Bloomberg Surveillance co-host Lisa Abramowitz, we've heard previews of this throughout the week. She tackles this topic in a Bloomberg Television special report. It's airing tonight. It's called Generation Interrupted. Check it out.
The quickest employment decline in history has prompted a major shift in the labor market. College grads facing a dried-up job market are considering other options. Cheryl Brooks is Associate Provost for Career and Professional Development at the University of Massachusetts.
We're seeing a big boost just the last couple of weeks in internships and co-ops, what we call field experience. These positions, they're looking at spring co-op positions or summer. So employers do realize that they need to continue to look at future hiring and to keep creating that pool of candidates for the pipeline for the future.
At the same time, many members of Generation Z are rethinking education plans. Enrollment at Harvard University, for example, is down nearly 20% from a year ago, and Princeton has a 12% decline. But one place where enrollment isn't falling is Howard University. The historically black university's president, Dr. Wayne A.I. Frederick, says that's because Howard benefits from a unique profile in a year that's notable for intense social activism.
Since the 2016 election, political science has risen to the top of the heap as one of the most sought-after majors at our university, and that is very telling. Biology was always one of our top major in terms of enrollment, and pre-med interest is also beginning to peak as we have seen the impact of the pandemic, and we talk so often about frontline workers. So all of that is definitely causing a shift in what young people want to do, et cetera.
Graduate school applications are also starting to surge as students put off entering the workforce. Stanford Graduate School of Business just had the largest incoming MBA class in its history. At the same time, entrepreneurship from the school's graduates is taking a hit. I spoke with Stanford Business Dean Jonathan Levin.
We normally have about 15% of our class that launches new ventures. We had some amazing companies come out of the Stanford Business School, including in recent years and including with just this last class. But I think maybe a little more anxiety about starting off on your own at a time when there's so much uncertainty in the world.
Every generation has its challenges, but the road ahead for this one looks especially difficult. How it rises to the occasion will define its legacy and the shape of the broader economy for years to come. For more, join me tonight at 7 p.m. Eastern for a Bloomberg Television special report, Generation Interrupted. In New York, I'm Lisa Abramowitz, Bloomberg Radio.
All right, and catch that entire special Generation Interrupted. It airs tonight at 7 p.m. Wall Street time over on Bloomberg Television. That is Bloomberg surveillance co-anchor Lisa Abramowitz. And it's an important issue. I think we've seen it in our day-to-day lives, Alex, in terms of this has not been an even pandemic, if there is such a thing.
No.
And it is really laid bare. We talk a lot about this. I'm sure you do in your area as well, just about how it is laid bare so many inequalities across the economic spectrum.
Yeah, and I'm also interested, I mean, I have lots of things to say about that, but in particular, I'm wondering how it's going to affect universities going forward, because if online is now more acceptable, are you going to have people paying all that money to get to Harvard? In which case, does it in some way help democratize education if you can go to a non-Ivy League school or a less expensive school, and that's now seen as more as just as legit.
Yeah.
If you can't go there and get the kind of connections that you were going to because you literally can't go there or you're on remote. Like, I kind of wonder how in 10 years that conversation plays out.
Yeah, I think about it a lot because, you know, you have a young daughter, I have a young daughter. I find it really hard to imagine that Dylan or Alice is going to go to like a straight up 4-year college, you know, and, you know, like me, like study English literature. Like, I think in the year 2020, or certainly in the year whatever it's going to be, 2030 something, we're going to be like, you're going to do what? No. Get a job.
Right. No.
or take some classes online and figure out what you want to be, and then go do that. But I'm not going to pay, you know, it would probably be like literally $1 million at that point for you to go hang out for 4 years.
Yeah, it's such a good point. It's like, oh, okay, take some online classes, get a job. You can hang with your friends when your shift's over.
Yeah.
Like, I started working as a teenager. Like, why should this be any different? But I do think it depends on how the uber wealthy play it out.
Yes. Totally.
Because if they're still, you know, no, you got to go to Harvard, you got to do this, you got to get the connection, you got to do this, then you're up against something else.
Yes. Yeah, and then there's a whole different sort of bifurcation and maybe an exacerbation of what we've already seen. So, in any case,
and we're the privileged people. Like, we're good. Like, imagine the actual inequality that we're seeing and how bad that's going to be.
It's incredible. All right, let's get down to Washington now. Nancy Lyons is there with some world national headlines. Hey, Nancy.
Hey, Jason, President Trump's campaign events will go virtual or be delayed after he and his wife Melania tested positive for coronavirus. White House Press Secretary Kayleigh McEnany was pressed on his condition.
I'm not going to get into the president's symptoms exactly. He's had mild symptoms, but he is hard at work. We're having to slow him down a little bit. He's been on the phone with Senator McConnell, Senator Lindsey Graham, been on the phone with Chief of Staff Mark Meadows talking about emergency declarations for states as well as stimulus. So he's hard at work despite the mild symptoms.
When McEnany was pressed about why President Trump chose to attend a fundraiser last night despite being told he'd been exposed to an aide that had tested positive, McEnany said it was an outdoor event and was deemed safe by White House operations. Following the president's diagnosis, some are keeping continuity of government at the top of mind. Bloomberg's Amy Morris has more on that.
London School of Economics professor of international relations Peter Trubowitz tells Bloomberg Surveillance the primary concern isn't the election right now.
The central issue here is continuity of government. Obviously, the first concern is the president's health. At 74 and overweight, he's in a high-risk category by the CDC's yardstick.
Trubowitz adds everyone should keep in mind half of the patients in the president's age group show symptoms, 20% end up in the hospital. In Washington, I'm Amy Morris, Bloomberg Radio.
Democratic presidential nominee Joe Biden and his wife Jill have tested negative, but it can take days for symptoms to develop. Biden is campaigning today in Michigan. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Well, speaking of the super rich, this is a fascinating story. Benjamin Stupples writing this. It's one of the most read on the Bloomberg. Alex Steele, I love this. Super rich using giant home loans to access cheap credit. It's fairly straightforward, right? Like, you've got a super expensive apartment, and in the case, you're a Russian oligarch, and basically you're like, you know what, I'm going to take a mortgage out on this because I got some things I want to do with some money.
Yeah, so you're looking at a cash out refi. So you probably wind up, you don't have a mortgage on the place, most likely. You don't want to sell it into a market. You don't need to sell it, but you want the liquidity. So that's what it's called. It's a cash out refi. You can get a 2.9% rate. You can take out as much as like 80%. You have to leave some equity in there, but you can take out kind of as much as you want as long as you leave a certain amount of equity in there, and boom, you got cash. I mean, like, why not do that when you have rates that are so low?
Yeah. Yeah, I mean, I think we are sometimes underestimating or maybe underappreciating, pun intended, that rates are still super low. I mean, it is one of the things that is helping augment this flight to the suburbs to some extent, insofar as it's in part about maybe not wanting to be in the city for some period of time, but also about, like, listen, money's cheap. Like, why not? Mortgage rates are, remain historically low.
Yeah, I mean, not that I've done a lot of work on this, and I'm trying to do this myself with a property that I inherited from my mother-in-law. My husband did when she passed away earlier in the year, for this exact reason. Like, the payments are so unbelievably low, and it's then basically the money that you have. Why not just play with it? Find a way to monetize an asset that doesn't require selling something in a really uncertain market. Co-op boards have a different feeling about that in New York City, but I have a different feeling about that in overall life.
Yeah, exactly. No, it's fascinating. And listen, New York especially was made by people who are very, very smart with money. So keep an eye on this story. It's one of the most read stories on the Bloomberg. The drive to the close coming up. It's Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all trading lower right now. S&P is down 23 points, a drop of 0.7%. The Dow does remain lower by 82 points, down 0.3%, but at the worst level of the day in the early going, the Dow was down 433 points, down 1.6%. NASDAQ is now lower by 211 points, down now by 1.9%. The NASDAQ 100 index is down 2.4%. 10-year yield 0.69%. Gold is down a little change, down less than 0.2% at $19.03 the ounce. And West Texas Intermediate crude down 0.4%, $37.06 a barrel. Stocks are slumping in volatile trading as investors weigh the implications of President Trump's positive test for the coronavirus, along with renewed efforts to forge agreement on fiscal stimulus. Recapping, S&P lower, down 23, a drop of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it is time for the Drive to the Close. Joining us once again, one of our pals, Alan Zafran, founding partner and co-CEO at IEQ Capital. Joining us on the phone from Foster City, California. Alan, so nice to talk to you on this lovely Friday afternoon, at least on the East Coast. How are things out on the West Coast? You guys have really had a time of it out there.
Boy, Jason, I tell you, you're right. It's just devastating. One problem after another. I feel for the families that are dealing with the fires in Napa and Sonoma County's wine country right now. And that's on the heels of fires from a few years back as well.
Yeah.
On top of COVID and political uncertainty. And we can't wait to get out of 2020 as fast as possible. That's how we feel right now.
Yeah, you and me both. So I want to talk about the COVID crisis more broadly and how you think of it as an investor. But listen, the news today, as we all know, is coming out of Washington and the president's positive case. I do wonder, given your sensitivity to the political landscape and how it affects, I think, your outlook from an investing perspective, when you see a headline like that, like, what's your immediate reaction? What do you do?
You take a deep breath and just reassess whether or not you really need to react. It's not good news when anyone contracts COVID. So there's nothing to be said about it, good or bad, regardless of your opinions about our president and his family. But the reality is he's contracted the virus. We don't know how ill he is, let alone what the implications are. So to take that to an extreme seems to be a dramatic overreaction. And regardless of the fact, markets in the long run are driven by economic fundamentals, not by who is running the White House. And economic fundamentals are determined by congressional legislators as much as by presidents themselves. So the reality is you sit and you wait, you watch, but you don't react to some news like that. It's a moment in time, and if you're a long-term investor, you can't just jump on a headline like that. You have to see how events play out over time.
I think where you do need to, though, look at it from a longer-term perspective is how do you deal with a 60-40 portfolio? And this isn't totally off the news either, because whether or not you get stimulus, contested election is more likely. Does that put the Fed in the driver's seat more? No matter where we look, we're still looking at basically what you call financial repression. What's the 60-40 division? Does the 40% have to mean bonds? Does it mean something else? What's the right way to look at that?
Alex, you asked an incredibly insightful question, and the problem is rates are going nowhere for a long period of time. So if I'm going to make less than 1% with 40% of my money sitting in tax-free muni bonds and treasuries, I have to, unfortunately, go out on the risk curve. I have to do something to create more return. Otherwise, I'm going to accept a lower rate of return. And so that is why stocks are up here. That's why valuation's up here, because I can buy a basket of stocks like a Comcast and a Johnson & Johnson and a Pepsi Cola as much as a Facebook or an Amazon or a Google. And I know those businesses are earning at a much higher return on my cash than I'm earning on a bond. If I'm going to take a long-term view, it's very hard to see how I'll lose money on those assets, and I will probably compound at a rate such that I can get an acceptable rate of return on all of my capital. You are being forced down on the risk curve because cash is trash, and even long-term bonds in the public markets aren't compelling. So you really have to reassess your risk tolerance, and you either have to say, I'm going to accept a lower rate of return, or I'm going to consciously increase my risk a bit, look for dividend-paying stocks, or look for other forms of income, such as real estate, in order to find a way to supplement the income that I used to get out of my low-risk bonds, because it's not going to be there.
Ellen, you can't see this, but I can see Alex Steele in our studio, and she's unscrewing the mic so she can drop it after that great question. But I have to ask you, it really was a great question and a great answer. So I do have to ask you, because Alex and I were just talking about this before we came into the conversation with you, which is real estate. I feel like we're all trying to get our heads around it, and whether there's opportunity, whether there's distress. Obviously, the answer to that question largely depends on geography, but how do you look at it? How do you assess it, especially from a portfolio approach?
Real estate, just like stocks, is specific both by type of real estate, meaning am I buying an apartment building, an office building, a warehouse, a self-storage. It's also specific by location. Buying an office building in Manhattan is a lot different than buying a small office in Riverside, California, which is a suburb of Los Angeles. So you need to be very clear on the nature of the building, its asset type, its location, its age, its tenants, its rent rolls. The good news is there are public companies that allow you to access these various types, everything from senior housing to self-storage to apartment buildings, and they allow you to have professional managers to manage them on your behalf. So as an example, you can buy an ETF, the symbol's IYR, and it gives you about a 4% yield. If you're going to take a very long-term view, even if you think that the occupancy in downtown Manhattan office towers is going to diminish somewhat, they're not going to completely go away. And so, again, relative to a bond that's giving me less than 1%, if I'm going to take a long-term view, chances are I'm going to be okay. And if you really have sophistication, you might go out on your own and look to actually buy directly a building or go into a limited partnership with other investors and structure the investment differently. It's a different form of income generation. It does have some tax advantages as well. The income is taxed more efficiently at a lower tax rate, but it's still a risk asset, and they use leverage on these buildings. And when things go wrong, the buildings owners can lose their money. So you just have to tread carefully, and like all things, don't put too much into any one thing.
And we don't have a ton of time here, but I want to get your idea of if we do get, if things get better and we get sort of inflation picking up higher yields, like when does it worry that investment thesis?
That's also, Alex, you got two outstanding
Crushing it. She's crushing it.
Bye.
Crushing it. The irony of the market is oftentimes they don't do quite as well when the economy is doing great and vice versa. It's funny, the economy did lousy and yet the markets went up because the Fed acted and people looking prospectively forward. By the time the economy is robust, real rates are going up, and in a short period of time, meaning in a year or so, in that time frame, interest rates will go up, discount rates used on future cash flows go up, which lowers their values. It'll force PE multiples down, and we'll see probably asset prices fall a bit, which will seem counterintuitive. But you do need robust economic conditions to support the long-term sustainability of earnings growth and cash flow growth, which is, in fact, which allows your assets to grow over time. So it will be a short-term adverse effect, but long-term it supports the prices you're paying.
All right, Alan Daffron, we're going to leave it there. Thank you so much. Founding partner, co-CEO of IEQ Capital, and I believe the latest to be installed as president of the Alex Steele Fan Club. So
we have a couple openings.
It's
not a ton, but fine.
They're legion. It is a legion of people. In any case, Alan Daffron, always appreciate you there in Northern California, giving us some really good perspective across all sorts of asset classes. We're going to get you to the close of trading for the week. What a doozy it's been. I think that's a technical term. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange on this Friday, October 2nd, and it is on to the weekend. Turned out to be a losing Friday, an up week, but the Dow, the S&P, NASDAQ all slumped. A volatile day. Worst level of the day. We had the Dow down more than 400 points. Ended the Friday session with a loss of 133 points, down 0.5. S&P at the close down 32, a drop there of 1%. NASDAQ down 251 points. That was a drop today of 2.22%. Stocks slumped in volatile trading as investors weighed implications of President Trump's positive test for the coronavirus, along with renewed efforts to forge agreement on fiscal stimulus. Well, as for the overall market backdrop, given today's news from the president, Alan Zafran is founding partner and co-CEO at IEQ Capital. He was our guest moments ago, right here on Bloomberg Business Week.
Markets in the long run are driven by economic fundamentals, not by who is running the White House. And economic fundamentals are determined by congressional legislators as much as by presidents themselves. So the reality is you sit and you wait, you watch, but you don't react to some news like that. It's a moment in time, and if you're a long-term investor, you can't just jump on a headline like that. You have to see how events play out over time.
Weakness in technology today with the NASDAQ 100 index down 2.8%. We saw shares of Apple slumping 3.2%. Amazon tumbled 3%. Microsoft, among the tech names moving lower, dropping today by 2.95%. Bottom line, NASDAQ down by 2.2%. Walmart is pulling out of the cutthroat UK grocery market after 21 years, agreeing to sell control of grocer Asda to TDR Capital and two brothers who made their wealth in gas stations. Walmart shares down today by 1.8%. Recapping, a down Friday, an up week. S&P falling 32 points today, down by 1%. The Dow down 0.5. NASDAQ down 2.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stiffy, you got some moves.
With Carol Masser and Jason Kelly on Bloomberg Radio.
All right, it is time to do some moving and shaking. One headline, having really not a lot to do with the stock market, but interesting to me, is the new James Bond movie. Pushed back to 2021, Easter 2021 from December. No Time to Die. Really looking forward to that one, I gotta say.
No,
right?
My gosh. But I do have to wonder if that's also what they see as they just don't think they'll get their butts in the seat.
Yeah.
And if
well,
there's one movie that can do it, it's going to be that.
It's going to be, and I think they looked at what happened with Tenet, that came out a few weeks ago, and it's supposed to be a great movie, and people were like, yeah, no, I'm good. I'm going to wait till it's on my TV, and then I'll watch it. All right, let's do some moving and shaking with our own Sarah Ponzak. She is cross-asset reporter. Oh, by the way, Alex, we should read you in on this. Carol and I have designated her the Queen of Wall Street.
Oh, great.
She knows all things about Wall Street.
That's what we're led to believe, at least.
I think that's great. I think that's a good, Queen of Wall Street. I mean, yeah why not?
Yeah. I'll take it.
I have a fan club, apparently, so...
I'm part of your fan club, Alex.
Alex has this massive fan club that we're just discovering. We're barely scratching the surface here.
Count me as one of them.
Is here. She's the Queen of Wall Street. So what's going on? I mean, how do you get your arms around a trade like today where we knew it was going to be funky as soon as we saw those headlines out of Washington, right, Sarah?
Look, it was a very wild day. There is no doubting that. And almost even more wild to me is the fact that, yes, we saw the S&P 500 fall 1%, and there was definitely concentration on the tech end of the spectrum, which is a change because in 2020, tech has been a safe haven. That wasn't the case today. But if you look beyond the benchmarks, you look at an equal weighted version of the S&P, for example, up 0.4% today. The Russell 2000 small cap gauge up 0.8% today. The fact that on a day when we have such shocking news out of Washington, D.C., there are so many questions. What does this mean for the election? What does this mean for a possible fiscal four package? What does this mean elsewhere, too? That we were able to see breadth almost in the stock market, and where the selling really was focused in was in tech.
And so, go ahead.
Oh, okay. I was going to say, what I also found interesting was that the travel stocks actually had a rebound and did well. So I wonder how much of this we can attribute to the news in D.C. and how much of this is a change after the third quarter's over. You're kind of selling some of the winners, you're buying the losers. Like, how much of it's that?
Exactly. We saw this change in tone really after Nancy Pelosi came out earlier today, and she said that the Trump diagnosis had changed the dynamic in stimulus talk. So that is one avenue that does help value cyclical areas of the market. But later on, we also heard from House Majority Leader Hoyer, and he said that policymakers could move quickly to provide aid to airlines. So that was a direct boost to the airline stocks. You saw the likes of Delta and others ending higher today because if the airlines are able to get aid, I mean, that is an immediate micro help to those shares, and you saw that affected. It was interesting because earlier in the day, I have these two baskets that I created. One is a reopening basket, which is much comprised of the airlines as well as hotels and cruise lines too. And I also have this other stay-at-home basket, which has the likes of Zoom, Peloton. The beginning of the day, that stay-at-home basket was outperforming by more than 1 percentage point. By the end of the day, that had completely reversed, and much of that was due to those airlines getting a lift.
Yeah, although, can we talk about the stay-at-homes for a second, and specifically Peloton? That's now $107 a share stock. I mean, up 2.2% today, up 6% yesterday. This was a stock that went public at 29 and struggled. It went down right around 20 and now at 107. I mean, talk about some stay-at-home resilience here.
It is unbelievable, up 279% today. And me and some colleagues on the team today, we have a story out, and the headline is, Market Gets a Harsh Reminder That COVID Remains Its Elemental Risk. And we saw that reflected in the trade today, at least before those headlines came out from Hoyer talking about airlines, because this just shows if the president and if the highest ranks of the White House can get COVID, so can everyone else.
Right. Well, and to your point, Peloton actually gave up some of those gains. It was up as much as 4.8%, so that illustrates perfectly, as you say, Sarah, exactly what's been going on with Peloton. I was on my Peloton this morning, quick flex.
I was going to say, you have one, right?
I do.
Jason, I'm a bit jealous, I must say.
Well, it's because he lives somewhere other than New York City. Is where, you know,
where it's
he
possible.
says it's New York, but like whatever.
Yeah, I know. This is Sarah. Welcome to my world. This is like every time Alex rolls in, it's like, oh, sorry, I was talking about New York City.
No, I don't even call it New York City. I just call it New York. And then when Jason's like, well, I live in New York, I'm like, nah, you really don't. Okay, back to some news. Airbnb also seeking a raise, about $3 billion December IPO. I mean, I have to wonder, like, that's a weird time.
It is a weird time, but if you look at how the IPO market has been reacting this year, I mean, it's been very healthy. You look at Snowflake, JFrog. Yes, these are software companies, not necessarily a travel company in essence, like Airbnb, but they have just been hitting it out of the ballpark when they have come and debuted. So this is kind of encouraging to companies that might want to raise some cash, that might need some cash in these trying times, like an Airbnb, for example. I mean, if you look at other companies and you look at the IPO index, for example, which is just sky high so far in 2020, it's not necessarily a deterrent to others to follow suit.
So, Sarah, just about a minute left here. I mean, did you get a sense talking to investors today that this Trump story will sort of last into next week, or does it essentially depend on, I mean, not to be too coarse about it, but basically like how sick he gets?
So, I mean, that is a question because right now, if President Trump ends up having very mild symptoms, as we have heard, and that is the case, eventually it's going to pass, and we are going to return to our normal conversation. However, if this does evolve and he becomes more ill, then that raises many more questions, raises many more uncertainties for investors, which we know investors all hate.
Yeah, no bueno for the uncertainty. All right. Sarah Ponczak, thank you so much. Cross-asset reporter, Queen of Wall Street for Bloomberg in our Bloomberg Interactive Broker Studio. See, now it just rolls off the tongue. Now you just say it, and it's like, once you say it enough, I think it just becomes a thing. Then you've got people saying, Your Highness, like...
I was like, wait, Interactive Broker Studio? I was like, I mean, sure, it's not that hard to begin with, but yeah, I guess.
Queen of Wall Street. I was talking about...
I'm going to wear a crown next time.
Yeah. Exactly. See me in a crown. All right, Sarah, thank you so much. Coming up, a lot more to do here as we try and close out this week. It's been quite something. But before we do that, let's get to Denise Pellegrini. She's got world national headlines. Hey, Denise.
Hey, well, if you were hoping for a light news flow Friday, you guys are not getting it this week. First up, President Trump postponing his campaign events or taking them virtual after testing positive for COVID-19, as we've been reporting. Vice President Pence cleared, though, for the campaign trail. Staffers say President Trump has mild symptoms. White House spokesperson Kayleigh McEnany.
I'm not going to get into the president's symptoms exactly. He's had mild symptoms, but he is hard at work. We're having to slow him down a little bit. He's been on the phone with Senator McConnell, Senator Lindsey Graham, been on the phone with Chief of Staff Mark Meadows talking about emergency declarations for states as well as stimulus. So he's hard at work despite the mild symptoms.
And the president attended a fundraiser last night at his golf club in Bedminster County, New Jersey, even after being notified he may have been exposed. Governor Phil Murphy advising attendees of that event to self-quarantine and get tested in the days ahead.
If you just get tested today, you won't have given the virus enough time to incubate. You won't know. You're doing that kind of blindly.
Presidential hopeful Joe Biden testing negative after sharing the debate stage with the president Tuesday. He's out campaigning in Michigan today. A bunch of others testing positive, including Republican National Chairwoman Ronna McDaniel, Utah Senator Mike Lee, and the head of Notre Dame, John Jenkins. He was at the White House Saturday. And the Washington Post reporting President Trump's pick for the Supreme Court, Amy Coney Barrett, had COVID-19 earlier this summer and has recovered. The Post, by the way, also reporting that the Justice Department and FBI are bracing for possible unrest on Election Day. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. Well, we talked about this headline there at the top of the hour because it is important news. James Bond, the latest film, No Time to Die. It was supposed to be, I thought it was December. It's supposed to be November 20th, so just in time for Thanksgiving and the whole holiday film-going season. Not going to happen. It's going to be 2021 before we see Daniel Craig in, I believe, his last appearance as James Bond.
I also wonder, and like, I'm totally making this up, but I mean, No Time to Die just doesn't feel like the right kind of title that you want to be releasing when people are dying of a pandemic and you might be looking at like a winter lockdown. It just feels a little off.
I think you are not wrong.
Like Tenet, that's one thing. Like, what does that even mean? But like, No Time to Die.
Yeah, so if you want to go to the movies later on this year, apparently pickings are going to be slim. You're going to be able to see, and I know this is one you're waiting for with bated breath, Alex, The Croods, A New Age.
I don't know what
that's coming
that
out
is.
from Universal. Listen, if you didn't love Croods, the original, maybe A New Age isn't going to be quite for you. And also a movie from Walt Disney called Soul that's going to come out on November 20th. But you've had a bunch of movies pushed back. The sci-fi thriller Dune, as well as Wonder Woman 1984. I got to say, I'm super into Wonder Woman 1984. Have you seen the trailers for that?
Actually, no, I haven't. B, of course you're into it because you were a guy in the 80s. And 3, I'm super excited about Black Widow, the Black Widow movie.
Yes.
Because that got pushed back before the James Bond.
That's right.
My husband and I were getting into why, and I was like, maybe they don't think that Scarlett Johansson can carry the picture. That'd be so terrible. And we had this whole conversation about it.
Right. Yeah. I feel like the shade you threw me for Wonder Woman, though, and then coming back with Black Widow doesn't quite match up. I'm just saying. Like, if you're like, and my husband and I were so excited about this small art film that was supposed to come out, like, but then to sort of be like, I will see your Wonder Woman and raise you a Black Widow, doesn't quite hit me right.
Hey.
This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. This headline from the Bloomberg Professional Service, learning a little bit more about President Trump's treatment. His doctor says the president was treated with a Regeneron antibody cocktail. Again, the president's doctor saying that President Trump was treated with Regeneron's antibody cocktail. Headline now on the Bloomberg Professional Service, checking Regeneron shares. They're up now by just about 2.8%. Stocks slumped in volatile trading as investors weighed the implications of President Trump's positive test for the coronavirus, along with renewed efforts to forge agreement on fiscal stimulus. Today, the S&P slumped 32 points, down 1%. Dow Industrials down 134 points, down 0.5%. NASDAQ down 251, a drop there of 2.2%. 10-year down 4/32, 10-year yield 0.69%. Gold down $5 the ounce, down 0.3% at $1,900.89. And West Texas Intermediate crude down 4.6%, $36.95 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Alex Steele here with you. So it's hard to believe. Yeah, it was Jobs Day, Alex. Remember that? It's like a thing that we talk about all the time. We preview it. We analyze it. We do know that amid this global health crisis, there is an unemployment crisis going on. Let's understand where we stand there, what the signs of hope are, and maybe some of the challenges ahead. Irina Novoselsky is back with us, CEO of Career Builder. She joins us on the phone. So that jobs report, what did you make of it, and how does it match up with what you're seeing at Career Builder?
Hi, Jason. Hi, Alex. Good to see you on this as well. The report was really what we expected, Jason. If you look at the unemployment rate that came out, the summer is usually a slower time, especially in this month where it had back to school, which was very different look for everybody as they were looking at that. And it also had Labor Day, which usually slows down a little bit of September hiring. But the fact that we saw a 6% decline in unemployment rate, where it really stalled when you look at the August-September number, it's nice to see the decline is picking up again. It wasn't as much as what we saw earlier in the summer at about 20%, but it's positive momentum.
What I was really struck by, Irina, though, was the permanent job losses and how that had been increasing and how that sort of creates a different narrative. And I wondered if you could give me some insight as to where those jobs are coming from and who's going to suffer the most. Because the other story was about women dropping from the workforce, and I wondered if there was a connection or not.
You know, this month especially, we didn't see the women dynamic happening as much as the other months. For example, if you look at the unemployment rate, it's been about flat between men and women, about 7.5%. So that was positive. There was a big gap in previous months. A lot of the permanent roles that we saw are really in the front end COVID impacted industries. However, there was one interesting pocket of growth that we saw for the first time since COVID, and that was actually out of retail sales jobs increasing. So in-store, looking for retail people for the first time in several months. So it's a sign that the retail spaces are believing that there's going to be more in-store shopping going into this holiday season.
And so as you look at the data, are there things that you see that surprise you in terms of the employers that are hiring now? Because you just touched on some of the trends, but what jumped out at you, or you went back to your team and said, wait, really? This is happening? Is there anything that really sort of caught you off guard?
Nothing that really stood out. The two interesting points is that financial and insurance services area has stayed very consistent throughout all of COVID. They have continued to grow. They haven't really felt the pressure that many of the other industries have felt. On that side, that was interesting. And on the candidate side, there's actually some interesting dynamics in that even though there's over 12 million unemployed Americans in the U.S., not all of them are looking for work. And many of them are really frustrated with the finding a job experience. Our data shows that over 70% are frustrated through the application, the litany of systems they have to go through, and many times they stop the process. And so we've been working with a lot of clients to make that easier and make it a two-step, easy step process so that candidates don't feel as frustrated between all the unemployment things they have to fill out and all the various systems to make finding a job easier for them.
Interesting. I also wondering what you're hearing about schools and the difficulty in reopening and how that's playing into the job market to get a sense of how short-term that might be.
Well, one of the things we are seeing on the school side is much more growth going into adult learning and schools as far as homeschooling. There is an increase for teachers around homeschooling, for software around homeschooling companies. But as far as brick and mortar schools, we're continuing to see that really not trend upward as some of the other industries are. They're continuing to lag.
And Irina, how soon would you see in your data concerns on the part of employers around second wave, especially when it comes to sort of service-facing industries and things like that? Like, what's the lag there, or do you get pretty high-frequency data when it comes to that?
The insight we see is pretty fast, but there's a lag in the decision making to start hiring or stop hiring, or on the pull through. So if a company starts to hire, it can take 30 to 60 days to find the right fit. I will tell you that one of the things that we were watching was the Netherlands as they went into lockdown, as the UK was looking at further controls, and their employment data doesn't seem to be impacted yet by any of those quote unquote second waves. And so one of the things that we're looking at is many companies have managed to find how to work through COVID and are probably more prepared if there is a second wave. Again, not the frontline industries that are slowly bouncing back, but everybody else.
Do you have a sense of how the unemployment benefits that went from $600 to $300 and then to zero, and lack of clarity on when we'll get more, how that's affecting everybody?
It actually really is affecting the frontline industries. One of the things that we saw is through July, we weren't seeing enough candidates actually apply for the frontline COVID industries. So, for example, candidates were deciding that they rather stay unemployed than actually go out and try to find a job given health concerns or the industry changes. And then even when it went from 600 to 300, we did not see a bump in candidates looking for employment. And so when you look at the break even on the salary versus what they're making through unemployment and the exposure potential of the risk of going back to regular jobs, one of the things that we are seeing is industries are really struggling to find people in those spaces.
Irina,
because of the
go
supply.
ahead.
No, I was just saying, because we see that the supply, you would think during this environment that the supply, given you have 12 million unemployed, would boom. But in those front-end COVID-impacted industries, they're actually really having to get creative with some of the tools and systems we're working with them on to help find the talent to fill those jobs.
What about geography? Hey, what have you seen in that regard? Because I feel like just about every day on this program, we're talking about, people leaving big cities, going to, some quote-unquote second-tier cities. Apologies to anybody who is offended by me calling their city a second-tier. But, smaller cities around the country, less expensive cities.
Something like mid-size?
Around the country. Mid-size? That's good. That's
good.
Better.
Like
mid-size.
second-tier.
It's second-tier. Mid-size is a much nicer way to put it. Sorry, everyone. But are you starting to see real evidence of that, or again, does that remain to be seen, Irina?
I'll answer that in two ways. On one side, one of the things that we are seeing is 70% increase in candidates searching for jobs in a work from home search. And on the other side, we're seeing about the similar increase, a little more tapered, where companies are posting jobs that have work from home optionality. So it's less becoming geographic based, especially with some of the key jobs, and much more open to where the talent is. However, we do see it vary, not even by city, but by state as well, where some of the big states, they are following the COVID cases pretty closely, where you're seeing some bumps in COVID, the pullback on job postings is coming through. And even with one of the things, I'll tell you, Colorado, for the last 2 weeks that we saw, had a little bit of a pullback. New York's had a pullback, versus some states we're seeing in Pennsylvania getting through a little bit better on their cases. They had some growth on job postings. So it is very state by state dependent. However, we are seeing a lot more work from home optionality and that flexibility being provided by our companies.
Yeah, that's super, super interesting. All right, Irina Novoselsky, thank you so much. Chief Executive Officer for Career Builder. She joins us on the phone from New York City. Some great insights. And, I tell you, the future of work, or not just the future of work, the current of work is really changing, Alex. And I feel like we see it across industries. And, these temporary changes, everybody's sort of triaging, it's going to become permanent in some cases, whether it's about the types of jobs, where you work, or how you work. It's sort of all happening.
Yeah, and also I have to think, too, what kind of ability we're going to have on a new administration to help any of that. In terms of retraining, Biden's talked a lot about job retraining. What does that actually mean, and who actually pays for it, I think, is a really good question. And if we do go more into cleaner green energy and the infrastructure there, how do you retrain like a coal miner to do that, or somebody who works in retail to do that? Like those are real serious questions.
Yeah, absolutely. And I also wonder the difference, and one of the reasons I was asking about the data is that, the monthly jobs report, we get a certain amount out of that, and certainly people trade off of it and whatnot, but we're increasingly relying on this higher frequency data that companies, candidly, like Career Builder, have for us to really understand some of the nuances. And, if you're trading, or maybe more importantly, if you're investing for the long term, like, you do start to rely on these different inputs, I think.
Oh, definitely, particularly in this day and age when we don't know how we're going to come out of it and what industries are going to look like. And I keep going back to it, like I kind of sound like a broken record, but it does bring me back to large tech companies, because like they're the ones that are doing the hiring. Like Amazon's the guy that's doing it. But is that good or bad? Like if they're the behemoth in the industry, is that something that we want to see, that they have that sole hiring power?
Right. Yeah, no, it's so interesting to think about how this is all going to evolve, and it'll be interesting to see what future job reports. And by the way, one of the things that got lost in all of this was the last jobs report before the election, and I feel like we were talking about politics in many, many different ways. But now we clearly are looking at a situation where this is going to be the employment picture, and maybe the employment picture is less important, but maybe this is ultimately something that a lot of people are going to decide on, because let's not forget, people are already voting. So much to talk about, and we're going to go to Washington in just a second. This is Bloomberg. All right, let's go to Washington now, and Emily Wilkins, she joins us there from the nation's capital, and bringing us up to date on what we have seen from there, and specifically about what we're hearing from the White House. Emily, thank you so much for joining us. Tell us what we know about the state of the president's health and sort of what people are talking about there in Washington.
So the president, since he announced early this morning that he did test positive for coronavirus, so far we've heard from his aides that he has mild symptoms. There was just a letter put out by the president's physician saying that the president is, as a precautionary measure, has received several different types of medication, that the president remains fatigued but is in good spirits, and he's being evaluated by a team of experts. It sounds like after that, recommendations will be made for Trump and the First Lady. First Lady Melania Trump has only a mild cough and headache at this point. The campaign has canceled all in-person events coming up. They might be virtual. They're still in the process of figuring that out. And I think a lot of people in Washington are waiting to see what impact this exactly does have, both on Trump's campaign and on other campaigns down the ballot, all the very competitive Senate and House races that we've been keeping a very close eye on.
Emily, I'm curious as to see the transparency we've been hearing from the White House, that being a very important factor as we try and parse any of these headlines. What's been your read so far?
So the White House has been in communication with reporters. I mean, as soon as Trump got a positive, right, he tweeted it out himself at 1 in the morning. Although a lot of people have been noting that Trump's Twitter account has been pretty quiet in the last 14 hours, which is uncommon for the president. But we have been hearing from the White House press secretary. We have been hearing from the physician to the president. So there has been communication. And I think everyone is just continuing to keep a very, very close eye on this.
All right, Emily, thank you so much. We really, really appreciate it, especially on such short notice. Emily Wilkins checking in with us from Washington, covering all things Congress and really all things Washington for Bloomberg down there. Let's go now to former Vice President Joe Biden, of course, the Democratic nominee. He is speaking, I believe, in Michigan.
The CDC, the Center for Disease Control, Dr. Redfield said, and I quote, and he held up a mask, he said, "These face masks are the most important, powerful public health tool we have." Then he held the mask up again and said, "This face mask is more guaranteed to protect me against COVID than a vaccine," end of quote. Leading scientists from the University of Washington tell us that we can save more than 100,000 American lives in the next 100 days alone if everyone wore a mask in public. So let me repeat that because it's so important. We can save 100,000 lives in the next 100 days, according to the head of the CDC, if everyone wears a mask in public. So be patriotic. It's not about being a tough guy. It's about doing your part. Wearing a mask is not only going to protect you, but it also protects those around you. Your mom, your dad, your brother, your sister, husband, wife, neighbor, coworker. Don't just do it for yourself. Do it for the people you love, the people you work with. The seriousness of this virus also underscores that we need regular testing with results turned around rapidly and that's available to everyone. It's not just the folks in the White House or who travel with me that deserve regular testing. It's folks in the meatpacking and food processing plants, grocery store workers. Every single American deserves safety and peace of mind. And it means we need transparency. Those who test positive need to participate in contact tracing so that everyone who they may have exposed can get tested themselves. That's how you stop transmission for any epidemic. It's basic. We need to take the science of fighting this disease seriously if we're going to save lives. And above all, the news is a reminder that we as a nation need to do better in dealing with this pandemic. Taking these steps is how we'll protect ourselves. And just as important is how we will protect one another. I hope that all those who are fighting this virus, including the First Family, and so many Americans today, recover and recover soon. My prayers are with the families of the more than 207,000 Americans who've died from this virus. Many of them got up this morning at the breakfast table with an empty chair of someone they lost and they loved. We understand. And there's more than 7 million Americans who are now infected, have been infected. That includes folks here in Grand Rapids and all across Michigan, especially all of you with UFCW, who are on the front lines of this pandemic and on the front lines of this economic crisis. UFCW workers who have always been on the front lines of fighting for dignity and respect you deserve. I know it's been tough. This morning, the September jobs report came out, the last one before Election Day. I'm grateful for all of those who were able to get their jobs back to work again, but there's fewer jobs than we had hoped for. Millions of families, millions, are still wondering when it will be their turn to come back from the brink. And the signs, according to the national press, are not encouraging. Once again, the pace of job gains is slowing down. Once again, we're seeing temporary layoffs turn permanent. This month marked the largest single-month increase in long-term unemployment since we started keeping records in 1948. There are now an additional 781,000 Americans who've been trying to find work for at least 6 months. They've been looking for work for at least 6 months and haven't found it. And in the past, that's a sign for permanency for them. We're still down 647,000 manufacturing jobs nationwide since the crisis started. All told, we are now 30 million workers who have either lost hours lost paychecks or lost their jobs entirely. Participating in the labor force, participation fell last month and remains sharply down since this crisis began, especially for women. There's another roughly 700,000 people who've dropped out of the labor force, stopped looking for a job.
All right,
The vast
and you are
majority were
listening
women.
to former Vice President Joe Biden, of course, the Democratic nominee for president. We saw him on stage earlier this week debating the president. Vice President Biden, we're told by his camp, they announced that both he and the former second lady, Dr. Joe Biden, both tested negative for COVID-19. He did express his sympathy for the president and his best wishes. Did talk about some of what we heard from the jobs report. I will note, because he spoke about wearing a mask, and that has been a sort of surprisingly contentious issue over the past few months. I should point out, because we are on the radio and you can't see Joe Biden, that he was wearing a mask during all of this, Alex. And listen, politics front and center once again.
Well, I think we were also wondering how Joe Biden was going to be handling this and how he was going to campaign. Would he suspend his campaign? Would he get as aggressive? Would he pull any sort of advertising on how badly he thinks Trump handled the virus, et cetera? So I think that this is the tone that we're going to get, which is, you know, we're thinking about you. We hope you're okay. And also this goes to show us that the virus fight isn't over and we need to fix it and our economy needs to be fixed too. It feels like that's now the template. So still pushing, but a little less, definitely not contentious like we saw on Tuesday.
Yeah, absolutely. Absolutely. Very good point. And echoing some of what we heard predicted by Josh Green when we caught up with him earlier. If you missed that conversation, check it out on our podcast feed later on tonight, because you're going to want to hear what Josh Green, national correspondent, had to say. You're also going to want to hear what's going on Capitol Hill. So we're going to bring that to you right now. Billy House, he is their congressional reporter for Bloomberg. And I'm wondering, Billy, since you've been following the tick, tick, tick of these stimulus negotiations, what's been the net effect today of the news from the White House on discussions around a new package?
Well, early on, Democrats, led by Speaker Pelosi, had said that the Trump's being positive on COVID adds a new impetus, she believed, in getting a deal done, and she's very positive. Republicans question why that has anything to do with getting a deal done. But anyway, the Speaker and Secretary Stephen Mnuchin did talk on the phone today for about 65 minutes, and apparently are going to keep talking, perhaps into the weekend, and the Speaker did put out a list of some differences that remain, but it says she's optimistic.
Well, I should also point out that Mitch McConnell also says they're getting, quote, closer on stimulus negotiations. For McConnell to weigh in, what's the significance?
Well, that's significant because he basically hasn't been weighing in, since they passed their so-called little skinny bill. The issue there, though, is does McConnell really speak for all the Republicans over there who certainly didn't want to go for the lower amount of money that was proposed by their own House chamber? Why would they go for higher money? But as focus is on the Supreme Court justice, also their intensity on the stimulus and opposing it has kind of waned a little bit too.
And so, who ultimately, Billy, you know this so well, you know the nuances of this so well, given that the ground is shifting so dramatically, who has the leverage? Who has the power here politically?
That's absolutely a great question. People have been trying to answer that. There's, 6 Republican senators who have some highly contested races this fall. So Democrats believe that they're the ones who are against the ropes and not doing stimulus. Now, whether that's true or not, there are a lot of moderate blue, so-called purple swing state Democrats in the House, too, who are from areas that are crying out for stimulus. Polls show that basically people would blame Congress in general, but not necessarily their own Congress people for a lack of stimulus. Or those pockets where perhaps Disney is or or airline centers are, airports that could be hit real hard. So it's really hard to figure out who exactly would get blamed and hammered for a lack of a stimulus bill. One thing we do know, though, is that the guy at the top, the president and his administration, does get a big share of the blame.
Do we think that if there was some kind of agreement, that Trump would sign it?
Well, if there's some kind of agreement, that would mean that Trump's negotiator, Treasury Secretary Mnuchin, helped to bring it along. And so the assumption is that Mnuchin's not, freelancing. And in fact, we're told that the president asked today, hey, how are those things going? Is that, or even though he's had obviously other things on his mind, he did ask Mnuchin today, how are those negotiations going?
And so, Billy, I do want to ask you, and this came up in our conversation with your colleague Eric Wasson yesterday, Mark Meadows in all this has been a very key player, and yet he seemed to recede earlier this week, and I'm counting on you to keep me honest here because you know this much better than I do. But how does he sort of figure into all of this, and what's the Kremlinology, as it were, around sort of who's involved and who's at the table?
Well, as we know, he was involved heavily. He was showing up with the Treasury Secretary back this summer, and he and Speaker Pelosi just do not get along.
Right.
And this dates from their days when he was a member of the Congress, in fact, the leader of the House Freedom Caucus, far-right group. Now that he's chief of staff, those tensions still apparently have not, gone away. But since he's now more focused on the Supreme Court, Mnuchin is kind of carrying the ball on his own, and things seem to be now making some progress.
Yeah. Because those two, I mean, and again, I'm counting on you to keep me honest here, like the Mnuchin-Pelosi axis has been pretty strong. They've gotten some stuff done.
They have, 4 times before, and they talk about how they can work together really well. And I know from actually covering Mnuchin and Meadows walking out of those meetings, it's a totally different vibe when Meadows is involved than when Stephen Mnuchin comes out of that room.
Fascinating. All right. Well, thank you so much, Billy. We know it's an incredibly busy day down there. We really appreciate your insights. You are right there covering it and talking to the principals involved. So thank you so much for your work and that of your colleagues. That's Billy House, congressional reporter for Bloomberg, joining us on the phone from the Capitol. Let's head over now to Denise Pellegrini. She's got some world and national headlines. Hey, Denise.
Hey, Jason and Alex. Well, here's something for you to think about. Doctors say that President Trump has been treated with Regeneron's antibody cocktail. Now, this is sort of like Tamiflu for COVID-19. It's an experimental drug. It is seen as effective in treating COVID-19 patients with higher viral loads who have not yet tested positive for antibodies, and it's supposed to make symptoms go away sooner than they otherwise would. A White House physician is describing the president as fatigued. We're hearing this all day long now, that he is in good spirits. And Chief of Staff Mark Meadows says the White House is ready for any eventuality.
We've got the mitigation plan in place to make sure that the government not only continues to move forward, but the work of the American people continues to move forward.
And news of President Trump's illness also bringing in an outpouring of sympathy, including from Agriculture Secretary Sonny Perdue. He sounds optimistic about the president's prognosis.
He keeps a very active lifestyle, but I think he's in a sturdy, hardy, stamina type of situation right now, and I hope that prevails well for his condition during this time.
Now, President Trump has postponed his campaign events, or he's taking them virtual, after testing positive for COVID-19. Vice President Pence, though, is out there. He is cleared for the campaign trail. And presidential hopeful Joe Biden testing negative after sharing the debate stage with the president. You heard him out there in Michigan earlier today, just a few moments ago, saying be patriotic and wear a mask. And Biden himself wearing a mask, as you pointed out, during that speech. And House Speaker Nancy Pelosi says the president coming down with COVID-19 could help emphasize the seriousness of the pandemic and help spark progress on those stimulus talks you were just talking about. Global News 24 hours a day, on air And I'm Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Denise Pellegrini, and now we're going to go to Charlie Pellet for a look at how markets are reacting to all this news today.
I thank you very much, Denise. You mentioned Regeneron. That's they're the drug maker that is making the cocktail treating the president. Shares surging after hours now, looking at a gain in Regeneron shares up now by 2.8%. Down Friday, up week. On the week, S&P 500 index did climb by about 1.6%. Today, however, stocks slumped. Volatile trading. Investors were weighing the implications of President Trump's positive test for the coronavirus, along with renewed efforts to forge agreement on fiscal stimulus. The Dow, the S&P, NASDAQ all lower. S&P down 32, a drop of 1%. Tech stocks hit particularly hard. NASDAQ down 251, down 2.2%. NASDAQ 100 index down 2.8%. Among some of the slumping tech names today, Apple down 3.2%, Amazon down 3%, Microsoft lower by 2.95%. The Dow down 134 points, a drop of 0.5%. S&P down 32, down 1%. 10-year yield 0.70%. Gold down 0.4%, $1,900 the ounce, and crude West Texas Intermediate down 4.3%, $37.06 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Alex Steele here with you on a very busy Friday and a very busy Friday afternoon. Politics, the markets, the upcoming election, a global pandemic, and so much more. What is an investor to do? Well, we're happy to have with us Bill Capuzzi. He is the CEO of Apex Clearing, joining us from Princeton, New Jersey. A recent report that they put out looking at what folks are owning right now, especially when it comes to the younger investor. Bill, really nice to have you here. How are you doing?
I'm doing terrific. Thanks for having me on.
What a day, huh? I mean, when you look at this from an investor's perspective, like, what do you see? What's the lens for you?
Well, first of all, give you some context that, I'm the CEO of a company called Apex Clearing, and we sit behind many of the fintech providers for retail customers. And so think of us sort of as the Shopify of investing.
Yeah.
And so we sit behind and we basically take in all these clients and process these trades. And, I think today is sort of similar to the rest of the days and since March, which has been extreme volatility, lots of exciting news that's driven lots of activity in the markets, and in particular for our clients, we're speaking about roughly 10 million customers that Apex services today. It has been an extremely volatile, exciting year in terms of what people have been investing in.
And so what have you found so far? Because, we've read and heard a lot about the pandemic and, different sort of trading patterns and different ownership patterns and maybe folks who weren't as invested literally and figuratively in the markets, really getting interested in it. Has your data borne that out? And what have you seen?
Yeah. So I guess the first part is, to your point about just, the sort of broad numbers. We've added roughly 5 million new clients to Apex this year, and to give you some perspective, that's up at about 2.5 times what our average was last year. And most of these people are new investors, and in particular, the data that we looked at that's behind the Millennial 100 report that we put out. These are millennial investors. Many of them are younger investors. Many of them are investing for the first time. And part of what's driving that are two things. Obviously, the extreme volatility. People were interested in what was happening. Two was no sports, right? Nothing to sort of keep their interest. Certainly no betting early days, in the spring. Three is mobile, right? So everyone was home, and the fact that many of Apex's customers are mobile first. People like SoFi and Stash, providing products that allow people to get into the markets really simply. And then lastly, sort of it's free, right? So trading for retail customers, by and large, in terms of the explicit costs, are now free. And couple that with the fact that people are now providing the ability to trade fractionally, meaning to buy a share or a fraction of a share based upon how much money you have versus the number of shares, right? An old sort of condition was, you bought a full share. Now you can buy the dollars that you have.
So, Bill, let me ask you a question on that though. Do we know yet how they trade? We know how algos deal with stuff. We know how hedge funds look at things. We know how institutional investors do it. What do these guys do? How is this different, and how then is it moving the market?
Well, so first of all, you're talking about millions and millions of individual, let's call them retail investors, which are for sure in 2020 having a dramatic impact on the markets. And you mentioned algorithmic trading. Those are for big institutions that are buying big blocks of stock. What we see is people buying 5 shares, 2 shares, even less than a share, right? So in the case of that fractional stock situation I mentioned, people can't afford, millennials can't afford 1 share of Tesla. So they're buying a half a share because that's all they can afford. And so it's just massive numbers of transactions that all add up to a lot of activity in the market, much more so than in past years in terms of the retail impact.
So then, but can they really move shares? Like if I own like 1/3 of a share of one of Apple, like I have like no voting rights, right? Like, so what's my upside?
Well, so first of all, the old Peter Lynch adage, right? Invest in what you know, invest in what you believe in. Same's happening here, right? So to give you some sense, again, for Apex, we've cleared 270 million trades this year. Right? 270 million trades. Now, okay, they're small, right? They're smaller than a big block trade coming out of a big hedge fund, but they add up, right? And they're not all a fraction of a share. Some of them are obviously full shares or 10 shares or 100 shares. When you multiply a number of trades per day across, a fairly large swath of the United States, public, it's certainly a big percentage of what's happening in the market today.
And so,
and the impact then on the individual names. You mentioned about the COVID, right? So we get into sort of the COVID effect. What's happening as a result of the market? Not surprising, in the Millennial 100 report that we put together, you see names like Johnson & Johnson, Pfizer, Moderna, right, that are either approaching or beginning their phase 3 trials. Right? Those are names, of course, they're going to be on the list. People are interested in who's going to come out ahead in terms of the vaccine for COVID. And then you have names like Peloton, right, that jumped way.
Okay, ladies and gentlemen, time's up for today. Let's sum up this week, how we did it today. Okay, on Tuesday, we made 200 pounds. On Wednesday was 4,150 pounds. On Thursday was a good day. We closed euro positions and we made a profit 6,550 pounds. Total profit for the week, 10,900 pounds. So all of you guys who followed my trades, well done. You did really well. Don't spend all your money. So I'll see you next week, as always, on Monday. So stay safe and have a great weekend. By the way, anybody who just started follow our trades, you can purchase the strategy from company.co.uk website, or you can find from all of my YouTube videos. On the ticker, you will see the address. Okay, guys, have a great weekend. I'll speak to you all on Monday. Bye for now.
I don't know. I go back and forth.
Yeah, I mean, I guess it's, I take his point, and I think it's a really important one that we shouldn't lose, which is people had a little bit of income. They were a little bit bored. They couldn't bet on sports. And
but if they bet on sports, do they stop trading stocks?
Well, yeah.
I don't know.
Maybe. I think so, because there's a lot of betting on sports.